رئيس مجلس إدارة الهيئة العامة لسوق المال والمواقع الراعي الوطني، أصحاب المعالي والسعادة، الأخوة والأخوات الحضور، السلام عليكم ورحمة الله وبركاته. الأخوة والأخوات، يحتل موضوع حوكمة الشركات أهمية متزايدة في مواجهة التحديات والتطورات وتعديل استقرار الشركات على الصمود والمنافسة الناجحة وإدراك نقاط القوة والضعف واغتنام الفرص ومواجهة التحديات. مضي عامين على اندلاع الأزمة وما تبعها من سياسات وقرارات تناقش الفرص والتحديات التي تواجهها الشركات. الأمر الذي سيؤدي بلا شك إلى حماية حقوق المساهمين وتنمية الأخلاق والأفعال، بدءا من تطبيق مبادئ الحوكمة ومرورا بتهيئة البيئة المحلية قبل إصدار ميثاق تنظيم وإدارة الشركات عام 2002، وفي إطار سعي الحكومة للحفاظ على المناخ الاستثماري وتعزيز ثقة المستثمرين بمدار الأسس الاقتصادية التي صدرت في ظل الأزمة المالية العالمية.
Following and building on last year's joint Hawkamah World Bank OECD INSOL International Landmark publication on the region's insolvency laws, we have set up a regional forum for insolvency reform in the MENA region to build stronger insolvency regimes, in particular to allow orderly exit of companies, to facilitate company restructuring and reorganization, and not simply liquidation. The forum will aim to engage, educate, and inform stakeholders about the reform process and serve as a platform for sharing international and regional best practices. We will invite all the countries of our region to participate. I cannot stress how important this reform initiative is for a region where the cost of insolvency, that is the percent of the estate, is 14.1%. compared to 1% in Singapore, where the average recovery rate on the dollar is only 30 cents, whereas the OECD average is 69 cents on the dollar, and 92.5 cents in Japan. Similarly, in the MENA region, it takes 3.5 years on average for a company to go through insolvency, which is double the OECD average of 1.7 years. In Ireland, it only takes 3 months for a company to go into insolvency. In formulating adequate responses to the issues I've been describing and be prepared to address future crises, because they will happen, much will be required from the region's policymakers and regulators. Regulations can be very blunt instruments, and therefore they need to be carefully formulated. In other words, regulators need to embrace good corporate governance themselves. They need to have clear roles, mandates, and lines of accountability, and staffed with competent personnel. Above all, they need to be effective, transparent, and predictable. We have seen how costly it is to taxpayers when regulators fail. In order to attract international investors, we need to understand their needs. It is worth remembering that there are many types of investors with different interests. When I speak of the need of attracting international investors, I speak of the need to attract investors with long investment horizons, the sources of what is called patient capital, not short-termism, with long investment horizons. The sources of patient capital, the pension funds of this world. In order to attract these types of investors, we need to understand their specific needs. For them, the debate has moved beyond just good corporate governance. For them to feel comfortable in their investments, they need not only to know that the company is well governed with strong internal controls and auditing processes, but that it is one that manages relationships with its employees, customers, and the communities in which it operates, and has a strong record for the environmental impact of its business. It is becoming widely accepted among investors that environmental, social, and corporate governance, ESG factors, have crucial impact on the bottom line. BP's recent oil spill, for example, halved its share price in a couple of weeks. To address these investor concerns about ESG practices in the MENA region, and in order to raise awareness for better ESG practices, Hawkamah, in cooperation with Standard & Poor's and the International Finance Corporation, has developed the first ever MENA-wide tradable ESG index. This is an exciting initiative that we will be discussing in more detail tomorrow. But as a policy recommendation, we also urge regional asset managers and sovereign wealth funds to start incorporating ESG criteria in their investment process. As a region, ladies and gentlemen, we've taken significant steps to improve corporate governance, which we can be proud of. However, global best practice has evolved and set the bar higher, and we need to respond. Addressing transparency and disclosure issues in the GCC is a key to the full development of the region's capital markets and to restoring investor confidence. Adapting and complying with IFRS, International Financial Reporting Standards, including for small and medium enterprises, would be a good starting point. We are moving forward on our disclosure practices, but reform efforts have lacked teeth and progress is too timid. Reform is imperative and urgent in order to help restore investor confidence in the aftermath of the international financial crisis. And what better place to advocate reform and hold our annual conference than in Oman, which has proactively been at the forefront of corporate governance development in our region. Let's not forget that Oman was the first GCC country way back in 2002 to start a corporate governance code. Hawkamah is looking at countries such as Oman to respond to the current governance challenges, to lead the region by example, and to turn a new leaf in corporate governance. Thank you.
الحفل الكريم. نبقى الآن مع كلمة الدكتور جراند كيرك باتريك، وهو رئيس حوكمة الشركات بمنظمة التعاون الاقتصادي والتنمية. Please.
Your Excellencies, Minister, distinguished guests, ladies and gentlemen. First, let me thank the organisers, the Oman Centre for Corporate Governance and the Capital Market Authority, for arranging this meeting in such a splendid setting, and also to our long-term partners, also Hawkamah. It's appropriate that we are here because Oman has such a long history in corporate governance. As already noted, it was one of the first countries to introduce a code in 2002, if my memory serves me correctly, and this was a major advance to the region. Now, the title of the meeting, A New Leaf, is indeed appropriate. For those who live in zones of hurricanes or disasters, the new leaf must be wonderful to see. It shows that life goes on. But for human endeavours, the new leaf is also a sign that we have learnt something and are now moving on again. So what have we learnt from this crisis, and how do we move forward? The storm which hit the financial sector of key countries of the world financial system is to a great extent still with us, although we've been able to overcome the danger of falling into another Great Depression as in the 1930s. And the security attached to major financial institutions is now much greater than it was 2 to 3 years ago. However, the macroeconomic conditions remain challenging. Deleveraging in a number of countries and sectors is still ahead of us, and the public debt in a number of countries is soaring. The search for yield, as Dr. Saidi just noticed, goes on, financed by high liquidity, and further quantitative easing cannot be ruled out. And that has caused massive funds to pour into some markets, putting pressure on exchange rates and contributing to a secondary round of mini bubbles, if you like, ranging from housing, real estate, to shares. increasing in a number of regions. This is a policy issue for a number of countries in the world right now. And global current account imbalances remain a concern, with few signs of automatic correcting tendencies for the moment. And of course, you would have all seen the discussions, very difficult discussions, which occurred recently at the G20 in Korea. However, we have learned a lot about the corporate governance lessons and regulatory failures that helped increase the amplitude of the crisis. And we're all striving to make changes to improve the situation, so that in this sense a new leaf has appeared. And indeed, we'll be discussing this topic in the opening talk, but let me briefly talk about the views of the OECD membership, which at the moment are 34 countries, plus a number of other countries and organisations who contribute to our debate. Now, when I talk about the OECD, I must say this is the membership, so that our publications and our analysis of the situation reflects the consensus from all these countries. So it's not just a group of secretariat like myself and my colleague here today, but the countries themselves have said, yes, we think these are the types of lessons. So that's very important to keep in mind. Now, at the outset of the crisis, very early on, the OECD Corporate Governance Committee, which has responsibilities for the principles, decided to take a close look to see what role corporate governance had played and what lessons we could learn. Now, the corporate governance principles have in fact developed much further than they were before. They are now the principal standard, have been for some years, of the Financial Stability Forum, which is now the Financial Stability Board. All G20 members have now joined the Financial Stability Board and therefore have accepted the list of basic standards, which include the OECD principles of corporate governance. And the Financial Stability Board, I might add, is under the overall umbrella of the G20. So G20 is the political process, and then beneath it is the Financial Stability Board. So we're talking about a rather important aspect of the new world, if you like, architecture. Now, what we did is we established studies to look at the failing companies and the successful companies, and also country systems. Now, I might add that even though there have been a lot of failed companies, a number have been successful. Similarly, a number of countries have come through the crisis very, very well. Sometimes people say, well, it's all over the world. Well, it's not. Countries like Australia and Canada didn't have a problem. Their banks didn't have a problem. Sweden didn't have a problem. USA did. UK did. And Germany, although Germany, for completely different issues, had severe problems. So we looked at all these and to see whether we could find, first of all, a flaw in the principles, and if so, what should be done about it? Now, we concluded, or the committee concluded, that by and large the principles seemed sound, but in many cases they simply had not been implemented. The outcomes that we were looking for had not occurred. Now, failure is unlike success, because you all remember the saying, success has many fathers, failure is an orphan, could be attributed to a number of factors, a number of actors and factors. There were the boards, there was management, there were shareholders, there were gatekeepers, and there were regulators. All of them contributed to the problems. Now, on closer examination, it seemed that many of the problems that we had identified in the financial sector also applied to non-financial companies. Now, I think the experiences in the Gulf of Mexico recently are all with us, and it must be particularly important in this region to see that here was a classic operational risk coming to fruition, and it seemed like risk management might not well have been as optimal as it should have. So many of the problems that we identified in the financial sector, by comparing both the good and the bad companies, could apply in probably lesser magnitude, but nevertheless important to other countries. Now, what are the type of lessons that we saw? First of all, management. Management sometimes did not fully comprehend the risks that they were taking. Sometimes the risks originated at much lower levels in their complex organizations. That's, I think, something that's extremely important. In financial companies, they become very, very complex. If you look at some of the issues, they occurred in subsidiaries. They occurred in subsidiaries sometimes even physically far away from the main office. But certainly subsidiaries were outside some of the internal controls, outside some of the managerial controls, and this was a major issue. Like I said, it's also important in other non-financial companies. Risk management was too often confused with compliance. Risk was also increased through irresponsible compensation schemes, particularly at lower levels, not necessarily at the high levels of the CEO, but particularly at the lower levels. Second, boards failed. They failed because to see that the assurance mechanisms were in place and functioning. Now, remember, it's not the job of the board to run the company, but to ensure that there are adequate controls, there's adequate oversight. Why did they fail? In some cases, they were dominated by powerful CEOs, powerful chairmen, and sometimes even worse when the chairman and the CEO were the same. That is a very, very powerful position to try and stand up to. They lacked, in many cases, independence and competence, and unfortunately, in a number of cases, they lacked both. And that is the truth. When you look at some of these companies who failed, one is struck by the nature of the board and how long they'd been together and how they just seemed to be a club, to put it carefully. Now, the third, shareholders often sold their shares rather than use their voice. Often they did not participate in some of the votes that they should have, and it was sometimes easier for them to sell out and leave. But of course, it wasn't always easy to have a voice. In some companies, it was very, very difficult to stand up and say, we don't think this is the right way. However, there were also many shareholders who cheered from the sidelines, took their profits and went away. Now, you can see some of these in some of the nastier transactions that occurred. Fortis, which basically bankrupted itself by taking over ABN AMRO, they had a shareholder meeting and 95% of the shareholders actually voted through this transaction. 35% of the shareholders were present. That's not many. So many of the institutional investors did not vote. At least our research indicates they did not vote, but rather because of the blocking of shares, they just expressed their unease with this transaction and then sold the shares immediately afterwards. The third group who bear a lot of responsibility are the gatekeepers, such as rating agencies who produce AAA bonds from subprime mortgages. This is real alchemy, how this happened. Worse still, the boards and managements accepted the results. Now, what we know now is that a number of responsible people knew what was happening. We have seen emails that have emerged from analysts who are saying, we would rate a cow if we were paid for it. We've seen many companies, seen many banks say that we knew that we were gaming the system that they were using to determine their ratings. So it was a severe problem. Auditors signed accounts that they might now regret, and the accounting standards took simply far too long to reveal the truth about the financial situation of companies. And to make it worse, there were a lot of political pressures applied to accounting standard setters to avoid talking about the truth of these companies. And that was the basis of the crisis. There was so much uncertainty about what companies were actually carrying on their balance sheets. We'd learnt this lesson before in the 90s in Japan. In Japan, they just disguised everything. Their accounting system allowed liabilities to be taken off the balance sheet. They allowed loans to be bad loans to be disclosed, to not to be disclosed. But that didn't stop investors trying to work out how much they had. So it didn't actually Accounting standards didn't contribute to, didn't make the situation worse, make the crisis. It contributed to it by not even showing what the truth of this financial situation these companies were. Now, the situation, however, is improving, and in that sense, a new leaf has occurred. As Dr. Saidi noted, codes have been updated. In the financial sector, at least, boards have changed quite markedly in composition and in operating procedures. It's now less common to see boards stacked with friends and big names. Competence is now being sought. And risk managers and internal control experts are in demand. So if you have qualifications in these two areas, it's a very good labour market for you right now. But importantly, shareholder activism is back and is no longer seen as, by some, as simply a sign of greedy shareholders and short-termism, which unfortunately it had been associated with in the past. There's an important movement now stressing stewardship codes and responsibilities of investors, not just the rights of institutional shareholders in particular. So these developments are all going in the right direction. On the regulatory side, and here we've seen major problems, there are advances in almost every area. However, not every advance, not every bit of new legislation might be going in the right direction or might prove optimal in the future. In particular, I am concerned that light touch is being confused with principle-based supervision and risk-based supervision. They're quite different, those two. One financial agency set at practice principle-based regulation, risk-based regulation, but in fact, it had only 2 supervisors for each of their major banks, only 2, and they're often junior people also. So this was light touch, so much so that you couldn't even feel it. So don't confuse that with principle-based regulation, because the problem is that the more detailed you become, like Basel III to some extent, the more the incentives are built in to try and avoid the regulation, to go around it. So I think principle-based regulation, risk-based, still has a long way, still can help us in the future. Overreaction has always occurred in a crisis and is probably occurring again now. But the key thing is that there have been major movements. Now, what does all this imply for the MENA region? So this is the theme of the meeting, and I think we'll know a lot more about it by tomorrow midday. Now, firstly, and here I echo what Dr. Saidi said before me, MENA is not immune from what is going on. It is part of the global financial system. An inflow of cash might disguise weaknesses for a while, but they'll become apparent when the money flows out again. As Warren Buffett said, you only see who's been swimming naked when the tide goes out. Now, this is a problem. I've just been in Asia recently, and they're already discussing the fact that some companies are saying we don't need to reform, because look at our share prices. Our share prices are rocketing. There's so many investors coming in, but this is a function of excess world liquidity and will flow out again fairly quickly. As Dr. Saidi said, you're after long-term investors, committed investors, and not necessarily a short-term investor who just wants a parking place for the time being. Now, it's also important to understand what is going on elsewhere, to consider issues that are appropriate to your own conditions. And the questions that we've been posing are also relevant, I think, in the region. Are you happy with the performance of boards and management? Are you really? Are you confident that investors are giving teeth to voluntary codes? Because a lot of the importance with the codes is extremely important. A lot does come down to how effective the market and those shareholders are in actually giving teeth to them. If not, the regulator has to take on more. But do you think that the regulators are sufficiently resourced, independent, and competent to handle the pressures? These are the questions that one has to ask again. Remember, in a lot of countries, they were fairly confident that they had it right, that the market was working, corporate governance codes were working. The unfortunate thing was, it might have worked in in ticking the box, but did not really affect behavior. And it's about behavior that we're looking at. Behavior cannot be easily regulated by law. However, the law and regulators can set up incentives which can make that behavior much more possible to see in the future. We'll be in a position to answer these questions at the end of the meeting, but in doing so, we must also focus on the complex structure of ownership in companies in the region. State-owned enterprises are extremely important. There are large unlisted companies in the area. Compensation may not be an issue, but certainly related party transactions and conflicts of interest are an issue. Indeed, we've just been finishing our first peer review of countries looking at board practices and compensation, and it was surprising how few countries actually there was a remuneration problem. In many countries there was not, mainly because there was a concentrated ownership and the owner was actually watching very closely. However, that also raises problems because the same owners can also be involved in exploiting conflicts of interest. I look forward to this meeting and thank you very much again for the cooperation in organising this, I think, very important gathering here in Oman, and I look forward to the meeting. Thank you.
يقدم الآن مدير عام بنك عمان الدولي دوغلاس أميت كلمة ترحيبية في المؤتمر.
Your Excellency, Maqbool bin Ali bin Sultan, Minister of Trade and Industry, Your Excellencies, distinguished guests, I'd like to begin by thanking the Capital Market Authority for organizing this seminar, which I'm sure will contribute greatly towards enhancing the corporate governance standards in the Sultanate. Oman International Bank accords immense importance to the area of corporate governance and is delighted to be the platinum sponsor for this seminar. Excuse me. Most of the high-profile corporate failures seen globally over the last decade, as also the more recent events in the global banking industry, underline the importance of corporate governance and the need for corporate governance standards excuse me, to constantly evolve to keep up with developments in the industry. These events also indicate that it is difficult to legislate good behavior and that corporations must themselves, while pursuing the bottom line, understand the importance of corporate governance for the long-term sustenance of their businesses. We look forward to an informative and engaging seminar to better understand emerging corporate governance best practices. Thank you.
باسم المنظمين يقدم الدكتور ناصر السعيدي المدير التنفيذي لمعهد حوكمة يقدم هدية تذكارية لمعالي راعي الحفل.